Top 25 Investment Strategies for Small Business Owners. As a small business owner, you must know how to invest intelligently and diversify your funds in order to achieve financial security in your personal life. We spoke with 25 experts who presented various investing techniques to assist you in growing your business and ensuring a secure financial future. The following are the top 25 investment strategies for business owners as recommended by the experts. 1. Strike a balance between outside investments and internal reinvestment in your company. One of the most difficult issues small business owners confront is managing the reality that their entire net worth is invested in a single small enterprise, their own. Small business owners should strike a balance between their broad portfolio investments and investing in their own firm. Despite the fact that diversification is a cornerstone of traditional financial advice, small business owners should carefully interview financial advisors to ensure that the advisor not only understands the need to reinvest in the company, but also has the expertise to guide the owner toward investing in other companies through the stock market when doing so provides a better risk-adjusted return. 2. Make a formal disaster recovery plan and investment to protect their enterprises in the case of a catastrophic natural disaster. Small business owners should invest in a written disaster recovery plan and business interruption insurance. Many small business owners, on the other hand, lack both a comprehensive disaster recovery plan and business interruption insurance, which can assist pay for running costs if they are forced to close temporarily. According to a recent study performed by Insurian with small business resource Manta, 61% of polled small firms do not have a disaster recovery strategy, and 60% do not have business interruption insurance. 3. Diversify your investments beyond the industry in which your company operates. Instead of focusing on your area of expertise, avoid the familiarity bias and diversify your investments. Many doctors, for example, invest substantially in pharmaceutical and biotech stocks, while real estate specialists choose to invest in real estate, doubling down on their business. You have a concentrated risk exposure in your field of business as a small business owner, and your investment portfolio should complement rather than add to that exposure. Building a broad-based portfolio with minimal investments in your field of business is a wonderful method to do this, as it will provide you a well-diversified overall allocation and a stronger ability to weather industry-specific instability. You can hire a qualified financial advisor to help you with this, or you can do it yourself using broad-based index funds or ETFs, exchange-traded funds. 4. Purchase rental properties to invest in. If you have some extra cash, it's better to wait for the next downturn and invest in affordable rental homes in regions of your city that are set to grow. Rental homes can also be an excellent investment because they provide you with a second source of income. This is a fantastic concept for those who don't want to solely invest in stocks. 5. Stay away from microcap stock investments. Most business owners spend a considerable percentage of their personal wealth in their company, which might be classified as a microcap equity investment from an asset class standpoint. This is a highly volatile asset with a high chance of loss. They could possibly have made substantial investments in non-diversified commercial real estate. This type of asset should be avoided at all costs in your portfolio. Large cap stocks, such as foreign established and emerging markets and other forms of fixed income, are required in your portfolio. 6. When investing in stocks, do your homework thoroughly before investing money in stocks. The most crucial thing for any small business to do is complete due diligence and extensively investigate options. Take your time and don't leap in too soon. Make sure you've done your homework on the market and have a firm grasp of how investments are created. Financial and other key information must be provided to potential investors by public companies. Analyzing that data can assist in determining if a stock is best to purchase, sell, or hold. Before investing money in stocks, the most crucial thing for a small business to do is complete due diligence and extensively investigate options. Take it slowly and carefully. Make certain you've done your homework on the market and have a firm grasp on how investments are created. Financial and other key information must be made available to potential investors by public companies. Analyzing that data can assist in determining if a stock should be bought, sold, or held. 7. Make a contribution to a retirement account. You should have and contribute to a retirement plan as a business owner, especially if you don't have an employment to rely on. Although many business owners intend to use the funds from the sale of their company to fund or at least supplement their retirement, they frequently overestimate the value of their company. This blunder can be extremely costly. Emphasizing the need of putting together a sound retirement strategy, it's critical to get started saving right away. Various plans offer a terrific method to save a significant amount of money in a tax-deferred account to help you save for retirement. 8. Invest in yourself and learn new skills. Invest in yourself and your ability to learn new things. You can take certain courses relating to your industry or enroll in certification programs that your company may require. Even if you make a lot of financial investments, you still run the danger of losing money. When you invest in yourself, you have a better chance of growing your business and increasing your earnings. You will always come out on top investing in yourself unless you make the commitment and don't follow through. 9. Put money aside for an emergency. Setting up an emergency fund is the first step in investing. If you have an emergency fund, you won't have to dip into your savings or investment account if you need money right away. You can start small, especially if you're in a tight financial situation. For starters, you could put aside as little as $1 every week. However, within 6 months, increase that to roughly $25 each week to start building your emergency savings. 10. Invest in a small office building, instead of owning a home. Renting office space is akin to renting an apartment. It is not, however, appropriate for every small firm. First and foremost, your company must be stable and well established. Purchasing a small office building might be a wonderful investment if you know your firm will thrive and continue for at least 7 years or more. And if you plan to stay in the same place, it will save you money on rent, and you will be able to use your office on your own schedule. 11. Make an investment in your people. Each employment decision you make as a small business owner is a step change in the direction of your company, for better or worse. The best investments we can make will ensure that we are able to attract and retain the best people for each role. Investing your time and energy to interview enough candidates to recruit the best fit talent. Investing your energy to provide advice and support. Or investing your limited financial resources to build the right compensation and benefits package or optimal workspace are all examples of this. Investing in your people might yield a higher return than any other investment. 12. Set up automatic investments in index funds with low fees. Setting up automatic investments in low-fee index funds is the easiest and most profitable investment method for small business owners. As a business owner, your focus is likely to be on your firm, and you are unlikely to have time to research and evaluate individual stocks or bonds. You may dollar-cost average into low-fee index funds by setting up automatic investments, which is a proven approach for long-term performance. This technique also allows you to invest as emotionlessly as possible because there is no incentive to look at day-to-day results because you aren't making any decisions on a daily basis. When investors watch their investments grow and fall on a daily basis, they run the risk of letting their emotions get in the way of their long-term strategy. 13. Make an investment in your product offering and revenue channels. Investments in product offerings by small enterprises will improve revenue and profit. Begin by examining your company's top 5 best-selling products and expanding on them. Recognize your clients' demands and discover a way to meet them. It may take a lot of brainstorming and a large initial expenditure, but the payoff and profit gain will be well worth it. 14. Put money into your own business. Investing your time, effort, and money into your own business is one of the most significant expenditures a small business owner can make. There are few investments that can compete with the internal rate of return of investing in yourself and your company if run efficiently. The issue becomes an overabundance of reliance on the business's health for future prosperity.
15. Consider cryptocurrency investing. Cryptocurrency and blockchain assets have fueled an entirely new gig economy, which is currently modest but increasing every day, despite the fact that they are still not totally popular and, in some cases, deemed arcane because of price volatility. Cryptocurrencies such as Bitcoin, Ethereum, and Litecoin may not be able to completely replace cash or fiat, but they could be a good medium to long-term investment.
16. Make the maximum allowable retirement contribution. Not only should you save for retirement, But you should also make every effort to contribute the maximum amount allowed each year. This is important because you don't obtain employee benefits like an employer match or a 401k as a business owner. You may not only put more money away for the maximum period of time by learning to discipline yourself to contribute the maximum amount, but then you can also use it to strategically balance the amount you owe each year by learning to contribute the maximum amount. 17. Make an investment in online marketing. As the number of individuals utilizing the internet has increased dramatically, online marketing is exploding. More than 90% of the population of the United States has access to the internet, and it is estimated that these individuals have made at least one online purchase. It's critical to set aside a percentage of your budget for web marketing in order to help your company expand. This investment will pay off handsomely because it expands your reach, and the majority of your target audience is online. 18. Lower your risk by investing in a certificate of deposit. First and foremost, pay yourself. It's a sentiment shared by business trainers, financial experts, and small business owners alike. Savings and checking accounts for small businesses do not always earn interest. And if they do, the rate is usually very low when compared to a standard savings or checking account. Opening a certificate of deposit, CD, is a means to store money at a greater interest rate. It's also ideal for cautious investors who don't want to incur big risks. Keep an eye out for special offers from your financial institutions and set up a short or long-term CD to preserve money for the future of your company. 19. Make an investment in your website's search engine optimization. Small firms should invest in assets that will provide them with revenue in the long run. Further marketing. The majority of people will use Google AdWords or Facebook ads. However, they usually only have a one-time chance to make a profit. When you stop investing in them, they cease generating leads for your company. Investing in search engine optimization, SEO, for your website, on the other hand, is a better option. Your site will continue to rank high for your keywords even if you stop paying for SEO services. And you will continue to receive organic leads from SEO for months or years after you stop paying for it. You have established an asset by investing in SEO that will continue to generate leads and revenue for your company for a long time. 20. Put money into a SEP IRA. Invest in a SEP IRA, self-employed pension IRA. SEP IRAs allow you to put up to $55,000 of your company's earnings into an IRA. You can then invest it in mutual funds or exchange-traded funds, ETFs. A SEP IRA has been shown to be a very effective, tax-free way to manage a company's earnings without paying taxes. 21. Hire an accountant. Don't try to handle your own bookkeeping. As your company expands, your finances become more complicated, increasing the likelihood that you'll spend way too much time trying to figure out how to make sense of your earnings and expenses in time for tax season. Not only will this save you time and money, but it will also allow you to focus on growing your business. Hire an accountant with some of your money and you'll save yourself a lot of hassles in the long run. 22. Make an investment in increasing your brand's visibility. It's critical, according to LendGenius, to get your company's name out there. As a result, you should spend some of your money on marketing campaigns, sales meetings, networking events, news articles, public relations interviews, and other similar activities to boost your brand's exposure. These marketing initiatives will aid in the introduction of your company to potential clients as well as the generation of new leads. 23. Diversify your investments by geography. Sanchez Wealth Management advises geographically diversifying your investments. Investing the majority of your assets in local businesses might raise your risk since if the market shifts against your particular place, your portfolio could suffer. By investing in stocks outside of your region or country, you can protect your entire investment portfolio from the effects of one location's economic woes. 24. Become knowledgeable about financial markets. It's always a good idea to educate yourself on what's going on in the financial markets if you want to be successful with your stock investing. Being informed of the economy, according to Fiverr, helps you to sell before the price of your stock or asset falls too far. Also, keep a close eye on your investments and learn to devise fresh methods based on current market conditions. 25. Learn to effectively allocate your assets. Small business owners, according to People's United Bank, should master diverse asset allocation techniques in order to be successful in their investments. It's critical to recognize that different asset classes respond differently in different economic climates. It enables you to obtain the correct asset mix, allowing you to profit from returns when they arise. Final thoughts. As a small business owner, you should understand how to invest your money properly in order to develop your company, enhance earnings, diversify your portfolio, reduce risk, and increase your return potential. To increase your profitability, it's critical to be open to new ideas and try out alternative techniques. To get started, use the financial techniques and expert advice listed in this video.